This is the video I wish I had when I first started trading, before all the blown accounts, before I started stacking indicators on top of indicators, before buying courses that promised clarity but delivered confusion. This video could have saved me years. Before we get started, I want you to know this video is not about entries, exits, or trade management. The goal of this video is simple: to give you clarity on what the market is actually doing. And if you've ever sat in front of a chart watching price move and felt confused, lost, or overwhelmed, stay with me until the end. This video could save you years of frustration. Let's get started by opening a fresh, clean chart. No indicators, no signals, no noise. You'll notice the chart I'm using here is the NASDAQ futures. That's just the example. This isn't futures specific. The way markets structure themselves doesn't change from one asset to another. Whether you trade stocks, forex, or futures, the same structural behavior shows up over and over again. So don't get hung up on the instrument. Focus on the process. This way of reading price transfers across all markets. Step 1. Determine the higher time frame range price is operating in. To do this, we want to look at the 1-hour chart. Let's identify and mark the range high. This isn't about finding the highest price on the chart. What I'm looking for is a recent area where price expanded and then failed to continue higher. This level matters because it represents a location where upside was attempted and rejected. This should be an obvious, clean rejection. Until price proves otherwise, this is our ceiling. Now, let's mark the range low. This is the low of the last major down move before price started trending towards our range high. If the range high is our ceiling, the range low is our floor. So now, without any indicators, we have the first layer of important information. Price is rotating between these two boundaries, and everything outside of these boundaries is just noise. All right, next, I'm going to mark the midpoint of this range. This is literally just the 50% level. Nothing special, nothing mystical, but it's one of the most useful pieces of information on the chart. Notice how price is currently bouncing exactly at the midpoint of this range. We'll go deeper into this later in the video. Okay, before we drop down to the 15-minute chart, let's go ahead and lock these 3 levels so they don't accidentally get moved. These levels will often remain on your chart for days, sometimes weeks. We are now looking at the 15-minute chart, and I have reduced the visible range to show the last strong trend that pulled back to our range midpoint. The only annotations we need to add on the 15-minute chart is the 15-minute corrective high or low. In this instance, it will be a corrective high. Focusing on the last range, we will look for our corrective level. The corrective high or low is the algorithm's real market structure shift. When you're trying to identify a corrective level, the key is to stop looking at every swing and focus on what actually changed price's behavior. A corrective level is a pullback where the market paused, made a decision, and then continued or failed. It may not always be the cleanest level, but it will be the most meaningful one. So why is this the corrective level for this range? You'll notice price was in a small uptrend before making the displacement lower that tagged our range midpoint. When the bearish displacement began, price paused and made a decision. The decision was to continue lower. This being a decision point makes it our corrective level. One important thing to keep in mind: even though I draw specific lines on my chart, I treat every level as an area, not a precise price. We're not trying to be tick perfect or catch exact turns. The goal here is simply to understand what the market is doing and how price is behaving around these areas. And that's it. We don't need any more lines on the chart to understand what price is doing. Yes, we could drop down to the 5-minute chart and mark a 5-minute corrective level for a little more precision. But for the purpose of this video, it's not necessary. What we have here is more than enough. Now, we move on to step 2. How do we use these levels to understand what the market is actually doing right now? All right, before we move into how to actually use this information day to day, let me pause for just a second. First off, if you've made it this far into the video, I really appreciate it. And at the end, if you feel like this video has helped you see the market a little more clearly, a thumbs up and a subscription genuinely go a long way. I'm already working on more videos like this, and if this one resonates, you'll probably want to see what's coming next. Now, this part is important. I'm in the process of building a trading community that's very different from what's out there. It's not a signal service, it's not hype driven, and it's not built around indicators. Everything is centered around understanding algorithmic price delivery and institutional market structure, the same way you're seeing it explained in this video. Inside the community, I release a daily market structure brief every morning before the market opens, a post-session review every afternoon, and I even have an option for a live view of my own chart so you can see the levels I'm marking each day in real time as structure changes. Just to be fully transparent, I don't call out entries or exits. I'll talk about execution concepts and entry logic, but the focus is learning how to read the market for yourself. If your goal is to actually understand what you're looking at when you open a chart, I genuinely believe this will be one of the best places to do that. Founding member spots are limited, so if you're interested, the link is below. All right, let's get back into it. Quick recap. We are back on the 15-minute chart. We have our 1 hour range high and low marked. We have the 1 hour range midpoint marked, and we have our 15-minute corrective area marked. Okay, now the good stuff. Let's pretend you have just sat down at the chart and marked these key levels. How do we use them? We know price rejected from this high back on December the 11th, and price has been trending lower ever since. Now this is hindsight, but for me, I knew if price kept being bearish, we would likely see the algorithm test the range midpoint. The algorithm uses the midpoint of ranges to determine balance. So personally, my bias was bearish during this entire price move. So price has worked its way back to the midpoint. What does that tell us? Midpoints will act like magnets. Price will get pulled back there. Once price is at the midpoint, the algorithm will decide what it wants to do next. We just have to be patient enough to wait for it to tell us. And how it tells us might be the most important part. The algorithm always shows its hand with displacement. Displacement, and whether price respects or ignores our levels, is really the only signal you need to understand what the market is doing next. So looking at our chart, as long as price is in between the range, midpoint, and our corrective high, we wait. We are waiting for the algorithm to tell us if it wants to go higher or lower from this midpoint. If the market wants to go lower, it's going to show us with strong bearish displacement, real candles that push cleanly below the midpoint, what most traders call fair value gaps. A couple important things to note. We're not interested in little wicks poking below the midpoint or small candles barely sweeping the lows. Those are usually just liquidity grabs, not real intent. And we also don't jump short the moment we see displacement. What we want instead is confirmation. We want to see price come back up and respect the midpoint from below. That respect is what tells us the bearish move is actually in play. And if the bearish move is in play, what is our likely target? If the algorithm doesn't respect the range midpoint, it's telling us something. It's basically saying the market isn't interested in going higher at this time. Once that happens, the next logical place price gets pulled to is the range low. That's where the rest of the business is. So when the midpoint fails, it's not random at all. It's the market shifting focus and leaning toward the lower end of the range. Okay, what if the market doesn't give us the displacement lower? What if instead the market wants to go higher? What are we looking for? For a bullish move to really be confirmed, we need to see the same thing in the opposite direction. That means strong bullish displacement pushing cleanly above the corrective high, and then price coming back down and respecting that corrective high. That's how we know the move higher is actually in play. Now I know some of you are probably thinking, so I can't trade anything between the midpoint and the corrective high? That's not what I'm saying. But you have to remember, price was bearish when it came back to the midpoint, so we can't just assume bullish price action until the market actually proves it. And the way it proves it is simple. Bullish displacement above the corrective high. We don't fight the current direction, and we don't try to predict reversals. We let the market show us its intent, and then we build trades around that. Now, this is probably a good moment to pause and point something out. Price is fractal. All that really means is this: the same behaviors you see on one time frame also show up on higher and lower time frames. So everything we're mapping out here on the 1 hour and 15-minute chart, the range high, the range low, the midpoint, that same structure is also happening on the 5 and 1 minute charts, and even smaller time frames. It's just a more zoomed in version of the same story. So if someone wanted to trade inside this range, that would just mean dropping down to a lower time frame to work with the same concepts. But for this example, and for clarity, we're going to stick with the 1 hour and the 15-minute charts. All right, so now we've got our ranges mapped out, we've got our corrective level, and we know exactly what we're waiting for the market to show us. At this point, there's nothing left to do but let the chart play forward. So price is now broken above the corrective high. Does that mean the bullish move is confirmed? Not yet, and this is where a lot of traders get themselves in trouble. That break could just as easily be a liquidity sweep, and price could still roll over from here. We're still waiting for the same thing as always: real displacement and then respect. But let's pause for a second and point out something interesting. Remember when we talked about price being fractal and how you could trade inside this range if you wanted to? Take a look at this. Kind of interesting, right? Now imagine what this same move would look like on a 5-minute chart. Think there was displacement and respect? All right, back to the move we were talking about. Let's let the chart play forward and see what happens. Whether we get that bullish displacement we're looking for, or if price rolls back over and comes down to test the midpoint again. So at this point, we can see that break above the corrective high is starting to look more like a liquidity sweep. And this is exactly why we don't trade simple breaks. While we are paused here, take a close look at the screen. Notice the area price is respecting. Remember what I said earlier in the video. Midpoints act like magnets, and the algorithm uses them as decision points. Let's let the chart play forward. Once again, price sweeps above the corrective level, but we still don't see any real displacement. And notice what happens right after. Price immediately falls back into the range. That's the market telling us the algorithm still isn't ready to commit to a bullish move. Let's keep moving forward. Now this is bullish displacement. It's clear, it's undeniable. But remember, displacement by itself isn't enough. We still need confirmation. And that confirmation comes from seeing price come back and respect the corrective level. We don't want to see any displacement back below the corrective level. All right, this is our confirmation. Notice how price pulls back, then pushes again, and starts forming those higher highs and higher lows we're all familiar with. That's the algorithm confirming the bullish displacement was valid, and that it's now ready to move higher. So from here, if the market is ready to move higher, what's the likely target? The 1 hour range high. Let's let this play out, and then we'll wrap this video up. So just like we laid out, price eventually makes its way up to the 1 hour range high. But there's an important detail here. It didn't get there right away. It took 3 trading days after our confirmation for price to actually reach that level. And that brings up something really important. One of the algorithm's biggest allies is time. Just because you can correctly identify where price is going doesn't mean you're guaranteed profit. The when, how long it takes to get there, is one of the hardest parts of trading to navigate. There are ways to navigate that, and I teach those as well, but that's a conversation for another video. Another thing worth pointing out, even though price stayed bullish overall and continued reaching for the 1 hour high, it still made plenty of pullbacks along the way. That's normal. And learning how to handle those retracements is just as important. Like I mentioned earlier, this video wasn't about giving you exact trade entries or risk management rules. The goal was to give you a way to sit down at a chart, map out a few key levels, and feel confident that you actually understand what the market is doing. Like anything else, it takes practice. But if you're someone who's been struggling to make sense of these markets, this framework is absolutely worth your time. And with just a little bit of study, you'll start to notice something. What I've shown you here today repeats itself over and over again. It's what I believe is the hidden pulse of the market. I hope you found this helpful. If you did, I'd really appreciate a thumbs up. It genuinely helps and gives me the motivation to keep making more of these videos. And if you're not already subscribed, please consider it. If you're someone who wants more depth than I can fit into these videos, consider checking out our community. The link's in the description. Until next time, trade with clarity.